That's, and some new faces.
Well, we're recording because we have some folks that couldn't make it. We set our time and day, and then AI boot camp decided to share the time and day. Andrew, it's been a while since we put this date on the calendar. But regardless, we have a lot of folks that also are going to watch the recording too. So for those that are watching the recording, we missed you today, but it's good to see you now.
Yeah, I made a choice, John. I was like, I'm gonna go hang out with my Buffini people. I can listen to AI later.
That's right. I have to anyway, right? Because it's like drinking out of a fire hose, and it's like I have to go back and just stop and repeat and stop and repeat. Great stuff, but for someone like myself who is not particularly tech savvy, it's a man. This old dog's having trouble with the new tricks, you know.
Same.
Well, thank
I
you.
feel you. Yeah, I'm working on my leadership loot bag right now.
Are you?
Um,
How fitting to do that around Halloween. It always feels like your Halloween bag.
Oh, that's a good idea.
Yeah.
All right, Gene, you want to get us started?
Sure. Well, hi everybody. I created this Bambi's group, and so I appreciate John being able to give me just a minute to greet y'all and just kind of reminisce a little bit. 5 years ago, I think we realized that, geez, we don't really have a great catch-all to coordinate and get to know each other where you are, and so we created this group, Buffini agents who live around military bases to be able to get to know each other, learn, grow, and send referrals back and forth. And so, if you haven't been a part of the Facebook group, feel free. I'll put the link in the chat. We also have a map that you can get on so people can know exactly where you are and what bases you serve and that kind of thing. So, welcome. Thanks for joining us. John, back to you.
All right, thank you so much. And that's how I first met Carla. She's on the call today and was able to send her a referral was through that Bambi's map. It's a powerful thing. And number one, it's Buffini agents. Secondly, as Gene said, there are folks that are committed to caring for and serving our military clients. And of course, our speaker today is someone who's passionate about that. Andrew Paul, many of you know him. He's a former Navy SEAL, a leadership instructor at Echelon Front, very passionate veteran advocate as well. He also is in the mortgage business and serves clients all over the country. And most importantly for me is the opportunity to call him friend. And I am so grateful for that. And so, Andrew, we're going to turn it over to you, and we appreciate you so much being here.
Awesome. Thanks, John and Jean, for putting this together. I know, putting a group like this together and the logistics and coordinating, it takes a lot of work, y'all. And so I just want to thank John and Jean for continuing to maintain the group and take the effort to put us all together. And I, of course, selfishly am grateful for this opportunity to speak to you because I mean, obviously, this is a great opportunity for me as a lender to be able to share what I know about the VA loan to empower you guys to go serve veterans. And obviously, a little FaceTime for me is a great opportunity. So I appreciate it. I see a lot of people on the call here that I know already. Some of you I work with and have known for years. Terry Hunter, gosh, I've known you for probably 15 plus years. Um, and um, and some of you I don't know. So great to meet you for the first time. Just out of curiosity, I mean, raise your hand kind of thing, just in the interest of time. Like any lenders in the room, or are we all real estate agents? Any lenders? Okay, great. Because if you're a lender, you're going to be like, God, I know this already because I do loans, right? But and but for y'all, I assume you guys have worked with a bunch of veterans. You're in this group, right? Buffini agents around military bases. And so if you haven't, wow, what a great opportunity. What I hope to do is arm you with some tools and some information that empowers you to have like meaningful conversations when you come in contact with a veteran, right? So I'm going to give you a bunch of factual things about the VA loan. But what I want you to do is I want you to think about how you can just weave this into your conversations, like when you're talking to a veteran. Some of that just starts with asking the right questions of, you're talking to a buyer and just throwing it out there. Oh, did you or your spouse ever serve in the military? And you can't tell by looking at somebody, right? So just asking that question, they go, "Oh yeah, my wife, well, she was in the Army for 4 years." Oh, well, have you ever thought about using the VA loan? And that's the opening. That's so I want you to create, that's just like one thing right there, that if you just start to think to ask that question, you might open yourself up to an opportunity that you didn't realize was even there. Um, and then now as we get into it, some factual tools, they're like, oh, hey, did you know? And like kind of some cool, like, did you knows that all of a sudden that person goes, oh, you know how to serve veterans. That's what you want to project. You want to be seen as that person, because here's the deal. And I have a ton of slides. Some of them we're not even going to get to them, but I'll just say this, like, there are so many agents out there who hardly ever interact with a VA loan. And let me give you the why. Let's take San Diego County, for example, where I live. I live in San Diego. And San Diego County is home to the highest concentration of veterans of anywhere in the country.
Hmm.
Now, the Virginia Beach area has the highest concentrations of active duty service members because of the various bases that are there. But when you combine basically eligible people who are eligible for the VA loan, San Diego County has the highest concentration. Now, just some rough statistics, and these numbers change a little bit from year to year, just to give you some idea. Roughly 30,000 purchase transactions happen every year in San Diego County. What percentage of those transactions do you think, in the county with the highest concentrations of VA eligible borrowers, what percentage of those transactions do you think use VA financing? Well, it's gone up a little bit from the dark ages, but it's about 12%. So
Wow.
let's just so on average, just call it 10 or 12% of all purchase transactions utilize VA financing. Now watch this. Let's take a loan officer, for example, and you can substitute real estate agent. Let's take a loan officer who does a lot of business. A loan officer who does a lot, and I mean a lot of business, would be a loan officer who does 100 transactions a year. I mean, there's a lot of loan officers out there doing 20. But let's take a loan officer who does 100 transactions a year. If you use the same statistics, the same proportion of loans, purchase transactions that use VA financing, you can say about 10%. So a loan officer that's crushing it, doing 100 deals a year, 10% of their transactions on average would be VA. That's less than one a month. And that's a loan officer in San Diego County with the highest concentration of VA loans anywhere. And doing something once a month does not make you an expert. And so by extension, it's the same thing with real estate agents. Most real estate agents, I mean, you guys have presumably more exposure to veterans because you're around a military base. But even still, if you go look at your numbers, I bet you it's not a super high percentage. There might be a couple of you who are doing a ton of VA. That may be true. But if we were to look at each of there's a bunch of you who only do a handful. So what happens? What's my point? My point is that somebody gets a VA transaction and they're like, oh boy, the last one I had didn't go real well. Why? Because the loan officer that they use only does at best one a month. And so the transaction, because most people don't do a lot of them, it gets a little bobbled. There are nuances to the VA loan. We're going to go into that stuff right now. And so most real estate agents' experience with the VA loan is not positive because the loan officer or the bank that was representing the buyer messed up the deal, didn't close on time. They didn't ask the right questions up front. There were some nuances about the VA loan that they didn't know to ask. And an otherwise good loan officer didn't do a great job with the VA transaction. So the perception in the market, VA loans take too long to close, they're weak buyers. Now, I know most of you, probably being in a predominantly veteran market, don't agree with that. And that's great. Like my mission is to arm agents to be able to educate other agents about how awesome the VA transaction, how awesome that VA benefit is. But that's what we're up against. So just understand that. I mean, market data, it's a very small percentage of transactions. And so most people don't get a lot of reps in it, right? So we got to stay sharp. And so again, I want to arm you with some information here today. So let me share my screen here, and I'm just going to go through some of these slides. So here is, give me 1 second here, because once I do this, it moves everything around. Give me 1 second. Okay, just like thumbs up. You guys can see my screen. Okay, great. Okay, so here we go. Guys, real fast because I want to focus on the good stuff. A little bit about me. I'm originally from New Hampshire. Grew up in New England, and I came from a military family. Almost everybody in my family served in the military, including my grandfather, who I've got pictured here on the left. And I always like to talk about him because he's like the patriarch of our family. He was a B-17 pilot in World War II. And 17 years old, he lied about his age and enlisted in what was then called the Army Air Force. In a very short period of time, he became an officer and a pilot. And then by the time he was 21 years old, he had flown over 50 combat bombing raids over Nazi Germany and the European theater. In this little news clipping, which you can't probably read from your screen, maybe you can, it shows that. That was the typical enlistment, was to do 50 missions. And that was, here he is, 21 years old, 50 combat bombing raids in a B-17 in World War II. And we often refer to that generation as the greatest generation. So that was like, I grew up hearing military stories, figured one day I'd probably go in the military too. And then just very quickly over here on the right, that handsome young devil dog right there. In case you don't know, that's a term we refer to the Marines. The Marines are nicknamed the devil dogs. That is my oldest son, Tristan, who was born on my first deployment. And he is now an active duty Marine on his first deployment. So my firstborn son, born on my first deployment, is now currently on his first deployment. And that makes me feel a little old. Um, so in fact, I just talked to him. He's doing great. He's on the USS Iwo Jima, and they're down in Southcom right now. So growing up, I figured growing up with all these stories, surrounded by military folks, I probably would go in the military too. Ended up, seeing this really awesome movie. I like to joke about Navy SEALs, the most realistic Navy SEAL movie ever. So I figured that's it. I want to be a Navy SEAL. I want to be like Charlie Sheen and jump out of planes, uh, blow things up. My dad, he wanted me to go to college, so ended up going to Vanderbilt University, went into the ROTC program, and just as I got my orders to go to BUDS, Basic Underwater Demolition or SEAL training, which they only take 16 guys a year out of the ROTC units, just as I got my orders, then this happened, 9/11. And that was the backdrop that I checked into BUDS in Coronado, California. And there's a tremendous amount of uncertainty around those times. We didn't know what was going to happen next, right? But everybody who lived through this remembers exactly where they were, right? Because the whole world stood still. And we remember who we called and who called us. And one thing was certain for me and for my teammates, as we checked into BUDS, we knew that we'd be going to war. So I checked into BUDS. I started with BUDS class. I graduated BUDS class 241. We started with a little over 200 guys or so in our class and graduated with just 16 of those original 200. And then went on to serve under multiple combat deployments in the Iraq War. And then in 2007, I got off active duty and went into the reserves and then went into the mortgage business because that's a natural transition, right? Jumping out of planes, blowing things up, and then go do 30-year fixed mortgages. By the way, just looking around the screen here, you all remember what was going on in real estate around that time? Not a great time to be getting into the real estate and mortgage business, right? '07, '08, total crash. Um, Mid '07, found my way into a Buffini 2-day turning point retreat in San Diego. And I don't know where my life would be today had that not happened. That was a real crossroads, and I was so blessed to be exposed to the Buffini way of life and working by referrals. So naturally, as I got into the mortgage business, everybody I knew was in the military. And working by referral, I naturally started doing loans for first the guys in my platoon, and then the guys in the next platoon, and then the guys in the SEAL team. And it just grew from there. And so, of course, I had people wanting to do VA loans, but VA loans were not a big deal back then, right? There was lots of other easy financing. And so all of a sudden I found myself in this niche. And over the last 18 years, have really become known as like this VA loan expert. So let's talk about VA loans. Why should we talk about VA loans and what do we need to know? Well, first of all, a couple things. I'm going to make a few statements and I hope to prove it to you over the next few minutes. One, they are easier than conventional loans. Now, most people would not say that. Most loan officers would say that they're not easier. And the only reason they say that is because they don't have a lot of experience with it. The fact of the matter is the VA underwriting guidelines are more forgiving than conventional. It's more forgiving of credit blemishes, more forgiving of debt to income ratios. You have more wiggle room because you can go to 100% financing, right? They're massively misunderstood. And the biggest opportunity, biggest why for me to do VA loans is to be able to serve my fellow veterans and to serve this underserved community. So often a veteran is told, no, don't use a VA loan. You should go conventional. And usually that's being told by an agent who doesn't know or understand the power of that benefit, and they start, turning them over to something else, and that's a real disservice. So, this is a great opportunity for you to be able to serve an underserved community and to serve those who have served. And to me, it brings a lot of meaning and purpose behind the work that I do. All right, so let's talk about what is a VA loan. This is actually really critical to understand because when you understand this fundamental, it'll help you understand a lot of other aspects of the VA loan. So first of all, a little history. The VA loan was created in 1944 as an act of Congress to help returning war veterans buy homes. So this program has been around for over 80 years now. And, when act of Congress, that means not much has changed about the program. So it's actually a very stable program that's very consistent. But now, of course, there's been a resurgence of VA loans in the last 10 or 15 years because as all the other easy financing went away, the VA loan stayed very consistent throughout. Now, what happens when a VA loan gets done? This is the part I want you to really understand. First of all, except for in very rare situations that we're not even going to talk about today, because it basically almost never happens, the VA doesn't do loans. Okay? The VA doesn't do the loan. Banks do loans, right? So we're a mortgage bank, so we do the loan. And what happens is that we do the loan, and then the VA comes in behind after the fact and provides an insurance or a guarantee on that loan. Now, how much does the VA guarantee that loan? Just need to know 25%. And the reason I tell you that is because normally a bank would never loan somebody 100% of the value of a home, right? But the reason why we banks will do that is because the VA basically says, hey, don't worry, we're going to guarantee this loan for 25%. So what that means is that the bank's risk or exposure is only 75%. It's almost as if the veteran has put down a 25% down payment. And that's in part why VA loan interest rates are so much lower than conventional rates, because from the bank's perspective, it's like the veterans put down a 25% down payment. So, of course, now you know a lot of these things, but VA loan, 100% financing and no limit. It's amazing. This has been around now. There's a big change in 2020. This is over 5 years ago now, but there is no VA loan limit anymore, and people still don't realize this. What that means is that you can buy a house, assuming that you qualify, to any amount. I mean, you could get a VA loan for $5 million, 100% financing, as long as you qualify for the payments, of course, right? So there's no VA loan limit anymore. That changed in 2020 with what was called the Blue Water Act. So no monthly mortgage insurance. Again, a huge advantage. Normally conventional loans, as soon as you put less than 20% down, you've got PMI, right? There's no PMI on a VA loan. There is something called the VA funding fee. That's what pays for the program. It's a one-time charge that the VA charges, but it gets rolled into the loan, so you don't even have to pay it out of pocket. And that funding fee is waived for disabled veterans. So that's another little talking point. You're having a conversation with a potential client and you find out they served and you say, oh, wow, have you ever thought about using your VA loan? And we'll get into some myths and misconceptions in a second, but maybe they say, oh, well, I think it expired. It doesn't expire, right? It's a lifetime benefit. And you can throw out this little, hey, did you know? And I'm sure you've heard, right? That if you have a disability rating, that funding fee that the VA charges is waived, and so just a nice little tidbit. Now, I didn't know that, right? So that's just a nice little thing. Disabled veterans and active duty service members who have a Purple Heart are also exempt from paying the VA funding fee. Um, you know, just a couple other cool benefits of VA loan, no reserve requirements. So, with conventional loans, a lot of times you have to have a little bit of money in the bank, right? So post-closing liquidity, you close, you put money down, you pay your closing costs. They want to see that you got a little bit of rainy day money. VA loans, believe it or not, you could have $0 in the bank. You can buy a house with a VA loan, zero down. You can negotiate with the seller to get them to pay for all the closing costs. And you could have you could have $300 in your bank account, and the VA is like, we got you, right? It's meant to help a veteran buy a home. So, you don't have to have any reserves or any leftover money. Now, I mean, it's probably a good idea that you do because things come up when you buy a house, right? But it's not a requirement of the VA loan. No prepayment penalties on VA loans. This is less of an issue these days because basically there's no prepayment penalties on most loans these days, but there's never been a prepayment penalty on a VA loan, even when every loan had prepayment penalties in the 2000s. 15-day grace periods on making your payments and things like that. All right, here are a couple key myths and say that one 5 times. Myths and misconceptions. And these are a few of the ones. Now, what I want you to think about, maybe for the Q&A section, write these down. Like, what are your war stories? Like, what have you heard? Okay, because I'm going to go through the top ones that I typically see, get through these really quickly, but then I want you to throw them back at me and tell me, well, I heard this, Andrew. Like, let's talk about that, right? Because I mean, dude, I do a ton of VA, and I want to make sure that there are no things in your mind that are like, well, we can't do a VA on this because somebody told you some BS someplace. So let's get this out there so the vets can use their loan. There is no credit score requirement on a VA loan. No credit score requirement. But Andrew, I heard they had to have a 660 credit score. Well, where's that? Or something else, right? So where does that come from? This is the distinction. There is the and Debbie, I'm going to mute you. Debbie, maybe you could just mute yourself real quick there. You're picking up some sound. So there's the VA guideline requirements, and then but you got to remember, what did I say in the previous slide? VA doesn't do the loans. Banks do the loans, right? And VA just guarantees them afterwards. So where a lot of the misconceptions in the marketplace come from, where the disparity, where you heard this and then you heard that and then you heard something else, it's because different banks have additional overlays, additional requirements, and those differ from bank to bank. So you're talking to one loan officer, and the problem is most loan officers don't know the difference between their bank's overlays and what the VA's actual requirement is. So they then speak their overlays as if it was a VA requirement. When if they're being articulate, properly articulating it, what they should say is, so I've heard, and I don't know because I don't work at Navy Federal, but I've heard that Navy Federal has a 660 minimum credit score requirement. Now, maybe they make an exception from time to time, but somebody walks in there with a 650 credit score and they may be turned away. And what does that inexperienced loan officer say? Oh, your credit score is too low. You're not eligible for the VA loan. Not a true statement. What they should say is, our minimum credit score is this, so we can't do your loan, right? So that one right there is a big one. You'll hear different things out there in the marketplace saying, oh, the minimum. Technically, VA has no credit score requirement whatsoever. The VA does require that we are required to pull a credit report and analyze a veteran's payment history. That's true. But there's nothing in the VA guidelines that specifies a minimum score. Okay? Another big one. I can't reuse my VA loan. Again, these are the ones I want you to have in your back pocket as you're having conversations with your potential clients that are thinking about buying a house. Somebody might say, oh, yeah, but I used my VA loan back in the 80s. No. It's not a one and done. You can use your VA loan over and over again. Next, people think, oh, I can't have more than one VA loan at a time. That's not true. There are some limitations in this case, but you can technically have more than one VA loan at a time. I wish I almost put a little asterisk next to that one. There are some limitations, and I don't want to get down into the weeds and the technicalities of that in this. But what I want you to know is if you're talking with a client and they say, oh, I already have a VA loan, I want that to not be a roadblock for you. You should be able to then say, well, you can have more than one VA loan at a time. And then they would say, oh, really? Oh, yeah. Now there's some limitations. You need to talk to Andrew or your loan officer who can figure out how much that second VA loan could be for. But it's not just like, don't let that be the end of the conversation. Oh, I already have a VA loan. Well, you can have more than one, subject to some limitations. So let's look into that. Um, the seller has to pay all my closing costs. Now, depending on what side of the transaction you're on, I see this misunderstanding misused all the time, right? Um, Listing agents are sometimes nervous about accepting a VA offer because they think that's going to cost their seller more money. Completely false statement, completely false. There is nothing. Remember I said this. There is nothing in the VA guideline that says the seller has to pay anything on behalf of a veteran. Nothing. Hmm. There's going to be some questions about that. Let's come back to that in Q&A. Where does that come from? But there is nothing that says, there's nothing in the VA guideline that says the seller has to pay anything. VA loans take too long to close. Common misconception in the marketplace. Why? Because the vast majority of VA loans are done by the three biggest banks in the nation, right? USAA, Navy Federal, and Veterans United. Big organizations, big call centers. They're handling thousands of inbound leads every single day. And you know what? They're usually not efficient. They're not delivering a personal level of service. So if you're an agent, there's a really high probability that the VA loans you did interact with were being done by a large bank that was maybe had poor processes and that didn't communicate really well and maybe did close late. But that's not the fault of the VA. The VA has nothing to do with it. Remember, VA doesn't do the loan. They just provide a guarantee to this loan after it closes. The VA is not even involved. The reason that that loan didn't close on time was because the lender wasn't good at their job. But unfortunately, the VA gets blamed, and the VA is not even involved, so they're not even there to defend themselves. So this is the misconception that pervades the marketplace that VA loans take too long to close. It's got nothing to do with the VA. It's got to do with a lender not being good at their job. VA appraisers bring the values in low. Ever heard that one before? Well, first, let me say this. You ever had a conventional appraisal come in low? Of course, we all have. VA appraisers have no special interest or desire to bring a value in low. And in fact, VA appraisers are not some special class of appraisers. They are regular appraisers that have simply signed up with the VA to get orders. And what happens is when a loan goes under contract, we, the lender, order the appraisal through the VA. I have no control over who gets assigned. I can't tell the appraiser what to do. The VA assigns the appraisal order to the next appraiser in the list, right? Round robin. And so that appraiser gets an email from the VA. You've been assigned the appraisal at this property address. So they go out, they do that appraisal. And when they leave that house, they drive down the street and they're doing a conventional appraisal for XYZ lender. So they're not some special group of, how do I say, belligerent government employees who are lazy. Like these are actual appraisers that they're hustling to get work and they just do an appraisal on behalf of the VA. These are regular appraisers. Now we'll talk about let's talk about low values on appraisals later in Q&A. But with VA, there's a huge opportunity that you have on a VA appraisal if it comes in low that you do not have on any other appraisal, and that's called Tidewater and ROV. We'll talk about that later. So VA requires too many repairs. Listen, there is a small nugget of truth to this, but like any kind of rumor or what's the word I'm looking for? I don't know. What is it when people have a perception like anyway,
A misconception?
yeah, for sure, misconception, yeah, but there's some nugget of truth. The nugget of truth here is that VA does have minimum property requirements, MPRs, and all that means is that they want the house that the veteran buys to be safe, sound, and sanitary. And there are some examples I can give you very quickly, such as no holes in the drywall, no leaking roofs. By the way, a leaking roof is a problem for a conventional loan. You can't have a cracked foundation, also a problem for a conventional loan, right? They don't want exposed wiring. They don't want, if you live in an area where it gets cold, you got to have a working heater. Okay, so but these are minimal things. Like, here's how I would describe it. If you got kids, Would you let your kids live there? I mean, if it's a real piece of crap, that's probably for an investor to buy and flip, right? So it's got to be like safe, sound, and sanitary. That's basically it. But there are no, and then we can get waivers on things. If an appraiser's job is to identify things that they can just visually see. An appraiser is not a home inspector. They're not going to be crawling into crawl spaces. They're not going to be in there plugging in socket testers to make sure the polarity on the wiring is right. That's not what they do. But if they walk into the house and they look up on the ceiling and they see a big water stain on the ceiling, doesn't take a genius to go, is that roof leaking? They're going to note that in the appraisal report. And then an underwriter is going to say, hey, we need a licensed roofer to just certify that that roof doesn't leak. Okay. So all they can really do is call out things that they can see visually. All right. Obvious things, right? Broken windows, holes in the drywall, stains on the ceiling that could be indicative of a leaking roof. That's the type of stuff that they could call out. Again, no maximum loan amount. Already talked about that, and we'll cover that separately. All right, very quickly, who's eligible for a VA loan? So you're talking to potential clients, like who could use a VA loan? Active duty service member with 90 days of service. That's the requirement. Once you go in the military, you need to be on active duty for 90 days. Then you are eligible for the VA loan. Boot camp does not count, by the way, because it's not really considered a service. All right, it's considered training, and you haven't even made it yet. So just FYI. Veterans who are discharged from service under conditions other than dishonorable. All right. So if you're out now and you had an honorable discharge, you can, in some cases, if you're even other than honorable discharge, may still be eligible. If you have a dishonorable discharge from the military, you lose the benefit. Just FYI. National Guard are different. All right. So National Guard and reservists are not full-time active duty people, right? They're in the Guard and they go in for 1 weekend a month and then 2 weeks in the summer. National Guard and reservists need 6 years of that 1 weekend a month, 2 weeks in the summer kind of thing. 6 years in the reserves, then they're eligible for the VA loan. 6 good years. Now, if you're not in the military, you don't know what I really mean by that. There's minimums you have to do when you're in the reserves. And if you don't meet your minimums, the year is not considered a good year towards your retirement or towards this benefit. So you got to meet the minimum requirements each year when you're in the reserves, which is pretty low, by the way. And as long as you do that for 6 years, you're eligible for the VA loan. Now, quick caveat. If you're in the reserves or the National Guard and you get mobilized, called up on active duty for 90 days or more, boom, you're eligible for a VA loan because now you've been on active duty for 90 days. Back to that first bullet point.
Okay, so let's back up. Let's back up a minute. The one in each bedroom has a 110.
Somebody mute Bob, and there we go. Good to go. This is a really great one for you to keep in your back pocket. Now, there are subject to some limitations here, okay? But the unremarried spouse of a veteran who died in service or from a service-connected disability. This one's awesome. Talk about being able to come in and help the widow of a veteran buy a house and use the VA benefit. The widow of a veteran can reuse this. Now, there's a bunch of caveats to this, and I don't want to get too far into the weeds. We can get offline. Call me later. We can get into the details of this, but I just want you to remember the widow of a veteran, as long as that veteran died in service or it's tied to a service-connected disability, that widow gets to use that VA benefit. Okay. We'll get into details another time. And then there's an eye chart of a whole bunch of other weird things that make you eligible. Merchant seamen with World War II service. I mean, some of these are getting like, I don't know if those guys are around anymore, right? But there's a whole bunch of other weird nuances where some civil servants could be eligible. But at the end of the day, what we do is we order what's called a VA certificate of eligibility from the VA. And the VA makes the determination whether a person is eligible. Part of our pre-approval process is to get that certificate of eligibility from the VA to determine whether that veteran is eligible for the VA loan. That's part of our pre-approval process. Do you know that those three big banks that I just talked about don't pull that certificate of eligibility up front in the pre-approval process? The number of times that I have been asked to jump in and try and save a loan mid escrow, come to find out the person was never eligible for a VA loan. Or they had used it in the past and their eligibility never got restored after they sold the house. So this is a key thing up front. Part of the pre-approval process is to get this certificate of eligibility from the VA. Now, I'm talking about eligibility, just to clarify, there are two things that we're talking about when we're talking about a VA loan. There is eligibility, and then there's qualification. Eligibility is this slide right here. Do you have the requisite amount of service to have earned the benefit? You're eligible. Qualification has to do with how much money you make, what do your credit scores look like, your payment history, can you afford it, like that kind of thing. That's like every other loan. So you got eligibility and qualification, but together that kind of defines whether you can get a VA loan. Okay, a couple other useful things for you. Who can go on a VA loan? Obviously, a veteran by themselves, right? This single veteran can go buy a house. A veteran and another veteran. So two vets can team up, buy a house together, combine their incomes and their eligibility and buy a place together. That's particularly useful here in San Diego where, home prices are really high and it's very hard for a young guy or gal to buy a house by themselves. They can team up with another vet. A veteran and their spouse. The spouse can go on the VA loan with the veteran. The unremarried widow of the veteran, as I mentioned a moment ago. This is a key though. VA purchase loans must be owner occupied. All right. So this fancy marketing out there. A lot of people trying to do lead generation. You'll hear a lot of people hear these terms like, build your investment portfolio with the VA loan. I kind of wince a little bit when I hear that. There's a slight truth to that, but you can use a VA loan to buy a multi-unit property. So 2-unit, 3-unit, or even up to 4 units. But you have to live in one of those units, right? So that considers it an owner-occupied purchase. And now you can rent out the other two, 3, or 4, units, and create an investment opportunity for yourself. That's fine. I think that's usually where you hear some of that house hacking stuff. But don't let anybody mislead you. And this is, this gets into mortgage fraud issues and stuff like that. But, VA loan has to be used to buy your primary residence. Okay, you cannot use it to buy a second home or a vacation home or an investment property or hey, I'm going to be getting out of the Navy in 4 years. I want to buy a house in Florida that I'm going to move into when I retire. Can you move into it now? No, then you can't use the VA loan for that. Okay, so just let me zip through a few of these things. I've kind of already talked about these in already. So just pre-qual versus pre-approval. These are the things that I see that derail veterans mid-process all the time. They get pre-qualified, not actually pre-approved, right? The big difference here being pre-approval means the lender has actually looked at credit, income, look at all the documents, tax returns, pay stubs, and pre-underwritten the loan. Big difference between what a lot of the big banks do, which is a pre-qualification, is a very surface level conversation. They might pull their credit, but that's about it. And they're just not looking at all the things that could go wrong. And then, of course, those things pop up, partway through, and then they fall apart. A couple other things, I mentioned the certificate of eligibility. Again, pulling that COE up front as part of the pre-approval process is extremely important. Number of times we'll pull someone's certificate of eligibility or COE and find that, the house that they sold 10 years ago, the VA entitlement is still obligated on that thing. We got to go through a process to get it restored. That's just not something you want to find out, a week before closing, right? This type of things you need to be doing before somebody's even writing an offer on a house. If you live, and we got people from a bunch of different states around here, if you live in a community property state, the VA requires that you count the debts of the spouse, even if the spouse isn't going on the loan. Okay, so people mess this up all the time too. I'm licensed in 45 states, so I got to keep all this stuff straight and know the different rules in the different states. But California and states around here, community property. Let's say the veteran says, hey, I'm going to buy this house by myself. My wife isn't going on it. Up front, I still have to put the wife on the application initially and pull a joint credit report to count their debts. That's the definition of community, right? Community property and community debt. And the VA requires we count those debts. We can drop the spouse off the loan if they've got bad credit. That's fine. That won't hurt them. But I do still have to count the debts of that spouse. And again, a lot of people don't know that. They mess that up. They don't, and then it comes up later. VA is unique in this sense. VA cares about if you have children, if you have childcare expenses. If you have childcare expenses, VA requires that we count childcare expenses like a debt. Okay. Now we can get around that for different reasons, legally, of course, but just FYI, I'm just sharing with you some of the unique things about VA loans so you can appreciate that, you know, look, you may have a lender that you work with that's an awesome lender, but if they don't do a lot of VA loans, these little things like this are what bites you in the butt later on, and they don't know to ask these questions up front. Um, all right, I'm just gonna last thing I'll just mention on here is the difference between what's called a manual underwrite. Okay, um, let me just put it like this: there's something called a manual underwrite, and a lot of banks won't do it. Um, a bunch will, and we will. So, if you have a buyer who has some beat up credit, maybe they don't have a lot of money in the bank. Every lender runs the loans through an automated underwriting system. And that automated underwriting system basically goes thumbs up, thumbs down, or thumbs sideways. Thumbs up is an approval. A thumbs sideways is like, hey, automated approval, couldn't do it. It's now considered a manual underwrite. And for a lot of banks, if you don't get that automated approval and it's a manual underwrite, they're like, we can't do it. We will do that. We will do a manual underwrite on a VA loan. So it creates an opportunity for us to serve veterans where maybe the automated system won't approve their loan. Um, okay. So unfortunately for active duty service members, the only class of people in the world who has their I'm no longer going to be working date on their pay stub. In the military, their pay stub is called an LES, a leave and earning statement. And active duty service members, their EAOS or ETS date, that's the day they're getting off out of the military, is right on their LES. So what does that mean? If they're getting out of the military in the next 12 months, that's a problem. Now, there's some workarounds on that, which is if they're going to re-enlist, we can get a letter from their command that says that they're eligible to re-enlist, and they sign a letter of explanation saying that they intend to re-enlist. But if you have an active duty service member who's getting out of the military in 9 months, their income is not considered reliable. So income that is ending within 12 months is a problem. So this is something you got to look for on the LES, the stuff we look at. Just want you to be aware of that. It can be a real challenge for people who are getting out. There are solutions, there's workarounds. If they've got an offer letter, we can go off of that if they've got a new job lined up. But it's a unique problem for active duty service members because when they're getting out or when their income is no longer going to be there is on their LES. So an underwriter obviously looks at that and goes, well, if their income is ending in 4 months, how they're going to make their payment in 5 months, right? It's a fair question. Something for you to guys know about is that condos. Any guys, show of hands, any guys deal with condos in your marketplaces, rural areas, maybe not? Okay, so you got condos. This is what you need to know. A condo to use VA financing has to be a VA approved condo. All right. So the way I describe it to my veterans is not every condo is on the menu. All right. It's got to be a VA approved condo. Now, here's the good news. I can get a VA condo approved. I do it all the time. At this point in my 18 years, I've probably gotten several, no exaggeration, several hundred VA condo complexes approved. So if you find a place that your veteran loves, remember, first thing, hey, is this a VA approved condo? If it's not, maybe it's not a place to write an offer on, or you come to me and say, Andrew, my buyer really loves this. Can we get it approved? And we can work with the HOA and with the seller to get the condo documents and we can get that condo complex approved. So that's an opportunity for you to have to potentially write an offer on a place that otherwise you wouldn't be able to. But you just need to know that condos have to be VA approved. Just realize that power of attorney is a common thing especially with our active duty service members. They are, they're underway, they're away for training, they're overseas. And so a lot of times, unlike non-veteran or non-service members, they may be using a power of attorney, spouse signing for them, et cetera, et cetera. And in that case, there's a little unique thing that has to happen right before closing. So, unique VA requirement. We have to verify that the service member is alive. This is a throwback to the old days where literally, like, consider Vietnam era, where the spouse, they're buying a house, turns out the veteran's dead, and it's been a week and just the word hasn't gotten back yet. I mean, we live in a different time now with electronic communication. So it's easier to solve this problem, but that's kind of where that requirement comes from. If we're signing with a power of attorney, we have to verify that the service member is alive. Like day of funding. It's a phone call, it's an email, we can handle it. But all right, so let's just do this. I know I've been going for a while and there's a lot here. We got issue. Let's just throw this to Q&A, but seller credits, people are often interested to know about this, especially as it relates to realtor commissions. Um, so max seller credit from a seller is 4% plus allowable closing costs. I'm not going to go into the details of that because that'll blow your mind, but basically it's 4% plus some that the seller can contribute. And the realtor commissions previously were not allowed to be paid by veterans. They now are allowed to be paid by veterans. And if the seller is paying your commission, whether it's, I know I can't say the number, two, two and a half, three, whatever it is, doesn't matter. Um, that does not count against the 4% seller concession maximum. Okay. So that's excluded because it's always been paid. All right. So talked about property values earlier. If a value comes in low, you have this unique opportunity thing called a tidewater. Show of hands, anybody heard it? Who has not heard of tidewater? Raise your hand. I'll talk about it if no one's heard of it. You guys all know what tidewater is? Great. What about reconsideration of values? Everybody know what that is? Very unique thing with the VA loan, right? Value comes in low, conventional or FHA loan. That's it, dude. That's the appraiser's opinion of value. You're not allowed to manipulate that. May not like it, but you're stuck with it. VA, we have an opportunity to go back to the VA and say, hey, we think the appraiser missed the mark here. We'd like a reconsideration of value. And again, unique to the VA. The VA, in their sole discretion, can look at that appraisal report and raise the value. They'll never lower it. Okay, so you got nothing to lose by asking for an ROV. And they can just go 300? Nah, 320. Okay, and I'm batting about 65%. When I've had a low value, I've gone back to the VA and they've raised the value for us. Now, who can request a reconsideration of value? Any party to the transaction. What does that mean? If you're representing a seller and the appraisal comes in low, what do you think that buyer's going to say? Well, the appraisal came in low, so come on down here to the appraised value, right? Of course. And if I'm representing a buyer, that's how I'm going to present that to a seller. Hey, the appraisal came in low, so hey, why don't we negotiate the price down, right? But if you're representing the seller, the seller could say, well, I might be open to that, but I think the appraisers missed the mark. I'd like the VA to do a reconsideration of value. In fairness to the seller, if the VA has missed the mark, if the appraiser's missed the mark, maybe the VA goes, yeah, it's not 300, it's 320. And the seller's like, I knew it. That's why we agreed on 320. So anyway, a seller can even request a reconsideration of value. All right. Condo approvals, this is just a little bit about me at this point. We can, just what are some of the things that I can do to help make you guys successful? We can get those condos approved for you. We do full pre-approvals on all of our loans, so we close in 21 days, like regularly. So again, you're negotiating, you're trying to set your offer apart from others. If you got a full pre-approval and can close in 21 days, hey, maybe a seller is more likely to go with that offer. So again, back to that whole myth or misconception. VA loans don't take too long to close. We close them fast. Just be aware if you're working with a veteran and, I see a lot of, I'm just going to call it like I see it, weak agents who don't want to upset the bus, it's like, or upset the apple cart. Like, oh, are you approved yet? Yeah, I'm working with USAA. And you're like, oh, okay. Let me tell you something. If your buyer is working with USAA, Navy Federal, or Veterans United, never mind the fact that there's a really good chance that loan's going to get messed up. What you really need to know is that each of those big box lenders are going to say to that buyer, did you know if you use one of our preferred agents, you can get a credit towards your closing costs, and they will steer that buyer over to one of their agents. So I'm just telling you, if you have a buyer and they're working with one of those big banks, you are not safe because they are going to try and get that buyer to work with a different agent. So just FYI. Um, and I guess last few things here, I'm licensed in 45 states, so pretty good chance wherever you are, I can help you. I'll call these listing agents to help get your offers accepted as well. And if you'd like my contact information, you can get it right there. You can scan the QR code um, and download my contact information into your phone. And if you send me an email, I'll even send you a veterans buyer guide that you can share with your veterans if you'd like. So that's all I've got at this point. I guess just wanted to give you guys some pieces of information and then open it up to Q&A. So yeah, Sarah, go ahead. Yeah, I think you're on mute there, Sarah.
Sorry.
Good.
Most people prefer me that way. You mentioned that to purchase a investment property with your VA loan would be mortgage fraud, which I agree. But it was my understanding, and please correct me if I'm wrong. Let's say you bought a home as your primary here in Tampa, and then you PCS, you're maybe upside down or very flat value right now on that home. You can rent that house out because
Oh,
you did
yeah.
legitimately purchase it and still have VA eligibility in your next station as long, but only if you're active duty, correct?
No.
Once you are retired, you can't have beyond there's a amount
No.
of VA that
No.
entitlement that you've used up.
Nope. Okay, so two different things. Number one, really quickly, VA loan has to be used to buy your primary residence. So you have to move into it. You know, the document that you sign at closing, the affidavit, says that I intend for this property to be my primary residence for the next year. Now, let's say you buy a house in Tampa and 6 months later you get orders to Virginia Beach. You're fine. That's not fraud. When you bought
Correct.
the house, you intended for that to be your primary residence. And, there's numerous examples of that. So it just has to be your primary residence at the time of acquisition. Now, listen, if you buy that house and you move into it for a week and go, check the box, now I'm going to go buy another one, that's BS, right? Like that, you know what I mean? So it's like if something legitimately changes, I mean, even if you're not on active duty and you buy imagine you buy like a one-bedroom condo and then 6 months later you meet the woman of your dreams on Match.com or something like that, and you get married and she's got 3 kids and you're like, well, we can't all fit in the one-bedroom condo, we got to move out. Well, then your life circumstances have changed here, like, you know what I mean? So it's just the primary residence piece is at the time of acquisition, and as far as you can know based on what you know for the future.
Can I just clarify something about my
Yeah,
questions?
yeah,
So you can do that if you PCS and you already have a house, you can purchase a second house
yeah,
if you are no longer active duty. Because we have a lot of,
yeah.
I mean, I'm at Central Command, right? So we have a lot of veterans that are no longer active duty. Isn't there a limit of total VA entitlement that you can have as a no longer active duty? You have to get rid of something before you can use the VA on something else once you've passed a certain price threshold if you're not active duty.
There is no difference whether you're active duty or not active duty.
Okay.
But what you're describing is earlier in the slides. Okay, so if you currently do not have a VA loan, right? You have no VA entitlement used up on any properties whatsoever. You can buy to any loan amount. There's no limit. Now, the part where you can have more than one VA loan at a time, and by the way, everything I'm about to say, there is no distinction between active duty or non-active duty. It does not change with that whatsoever. Once you have one VA loan, what happens is the VA is guaranteeing a portion of that loan, right? And so that what that's called is called entitlement. You have some of your VA benefit or your VA entitlement is used up insuring that loan. So you no longer have full entitlement. Now, again, whether you're active duty or not, you want to buy a different house. You job opportunity, just need to be someplace else. This no longer serves my needs. I want to buy a different house. You could use a VA loan again, subject to some limitations. And those limitations have to do with one, how much entitlement is used up on this house already, and the county in which this next house is being bought. So the entitlement limitations only come into play if you have some VA entitlement used already. Then you go into, okay, where are you buying next? And you have to look at each county differently. Different counties have different median prices and then therefore different maximum available entitlement. So you look at the maximum available entitlement, subtract away how much is used up, and then what that determines really is your 100% financing maximum on that next purchase. It's not the maximum loan amount, but based on that criteria that I just described, we'll figure out what this buyer's 100% financing threshold is on that next purchase. Let's just say it's 475,000. What that means is they could buy a house up to 475 with zero down, but it's not the maximum loan amount. They could actually buy a house for more than that. But once they go over the 475, they have to put down 25% of the amount that exceeds that 475. So, for example, if they bought a house for 575, in this example, they'd have to put down $25,000 because that's 100,000 above their 475. So again, this can get kind of into the weeds. I hope I kind of answered that just conceptually enough. But each VA eligible buyer's scenario is a little bit different depending on the county they're buying in and how much of their entitlement is already used up on the house they already own. Now, if they sold that house, they get all their entitlement back. They have full entitlement. Boom, no limit. Back to the no limit option. So, Sarah, does that make sense?
It does. I had somebody tell me something a little bit different yesterday, and I thought that doesn't make any sense. And you just clarified it in a different way that they did. So thank you.
I'm right. I'm serious. Like, but some also could have just been maybe a confusing explanation, but all right.
The point is, if you have a VA loan, you need to get done. Call Andrew because he's the expert. He does more than one a month, like he was talking about earlier.
Yeah,
Andrew,
those are unique scenarios, and they can be confusing for sure. So,
all right, Gene.
Hey, Andrew, thanks for doing this. This is great. My question has to do with the funding fee and refinancing.
okay.
It's been a while since I've needed to encourage anybody to buy now and refinance later, but rates do look like they might be coming down a little bit. Does a VA loan have to pay a second funding fee in that respect?
Good question. Let me start off by saying this. There are only three types of VA loans. There are only three. There's a purchase, there's a cash out refinance, and there's a VA streamline refinance, or what is actually technically called the interest rate reduction refinance loan. So, talking about a refinance, you're doing one of those two things. Cash out, you're taking money out, or VA sees a refinance from a conventional loan into a VA, that's considered a cash out. And then you've got the interest rate reduction refinance loan, the ERL, as some people call it. That is a great opportunity. And that is only if you have a VA loan, you can refinance into a lower interest rate into another VA loan. And the benefit of this VA ERL, this interest rate reduction refinance loan, is that there's no requalifying. So they could have lost their job, they could have retired. We do not have to look at their income again. As long as they have made their payments on time for the last 6 months, they get to refinance and take advantage of a lower rate. There's no appraisal on a VA interest rate reduction refinance loan. VA is already guaranteeing the loan. The way they see it is we're already guaranteeing this loan. If they've been making their payments on time and we're lowering the rate in the payment, then obviously they can afford it, so give them the lower rate. Now, the reason why I give you that explanation, Gene, is because the funding fee for an ERL is 0.5%. It's much lower. The funding fee for a VA cash out refinance most of the time people have used their VA loan already, is 3.3%. So the VA funding fee on a cash out refinance is pretty high. But in both cases, or in all cases, I guess I could say, if they have a disability rating, no funding fee. Okay. Whether it's an IRRRL, not taking cash out, just the reduction refinance loan, or whether it's a cash out refinance, if they have a disability rating, then they're exempt from paying that funding fee.
And I'm assuming it can get rolled back into the loan.
Yes,
Yeah.
absolutely. Yep.
Yeah. Okay, thanks.
All right. We are over on time, Andrew. Thank you so much. I'm assuming that if anyone has any more questions, your contact info is right there on the screen and they can reach out to you anytime.
Yeah, I mean, that's my cell. I mean, that's my email. You can scan that QR code, get all my info. And, if you want to go deeper into some of these questions, I'm absolutely, happy to, go deeper on these things and answer any unique scenario questions that you've got. So, yeah,
And
reach out
Bobbin, did you
anytime.
have your hand up? No, you were just okay. All right, everyone, thank you so much. This is the first of our quarterly meetings for Bambi's in Zoom meetings. And so in January, we offset it a little just so that we're not in line with everybody else, be a little different. So in January, we'll be having another meeting and we will send out information on that. Again, Andrew Paul, thank you so much. So much great information. And I agree with, let's see, it was Kelly who said we need a bigger audience to see this. So it will be recorded and advertised, and we'll try to get it out to as many people as possible. Everyone, thank you so much. Have a wonderful week, and we appreciate you being here. Bye bye.